Welcome to accounts. We're going to look at control accounts today, gentle folks. But our focus will be on the purchase ledger control account. Now, here are some steps to writing out the purchase ledger control account. If you can pause the video and write these notes, no problem. It says number one, the steps. You're looking at steps in creating the purchase ledger control account now. Number one, it says purchase ledger control account would open each period with the total of the accounts payable balances at the start of the period. What that means is it's referring to the amount of money that you owe persons, meaning creators, right? The total amount of money you owe them. Step two, then post the total of the returns out as day book to the debit side of the purchase ledger control account. Then at the end of the period, you impose the totals of all the payments to creditors during the period from the cash book to the what? Debit side of the purchase ledger control account. This is followed by posting to the credit side of the purchase ledger control account the totals of all new purchases during the period shown in what? Purchases day book and then the balance of the control account. Now we're going to look at an example of how this is done. It says purchase ledger control account data, credit balances, January 1, 2006, 3,890, checks paid to the suppliers during the month, returns outwards to suppliers in the month, bought from suppliers in the month, credit balances on January 31 as extracted from purchases ledger. Now, this credit balances on January 1, where it should go? It will go where under the debit side. Why? Because we said that the purchase ledger control account will open each period with what? Total of the accounts payable balances at the start of the what? Period. And this now refers to the amount of money you owe persons, you owe creditors, alright? And to start this right here. Good. Then now, checks paid to suppliers during the month, 3,620, go where on the debit side. Why? It says at the end of the period, you post the totals of all payments to what? Creditors during the period from the cash book to the debit side of the purchase ledger control account. That's the reason why we post this transaction right here. Good. Then you have returned out to suppliers in the month 95. Step 2 says what? Then post a total of what? The returns out was day book to the what? Debit side of the what? Purchase ledger control account. That's why you have the return out was 95 right here. Good. Then you have bought from suppliers in the month 4,936. The one. This is followed by posting to the credit side of the purchase ledger control account the totals of all new purchases during the period shown in what? The purchases day book. That's what you have right here. 4,000 because you bought suppliers during this month. Alright? Then you have credit balances on January 31 as extracted from the what? Purchases ledger. Credit balances. Right? What this means now, gentle folks, you're going to add up both sides. Follow me? The credit balance, and when you say credit balances, right? What this really means is that the credit side is more than the what? Debit side. So this credit balance figure that you see here will go on the what? Debit side of the purchase ledger control account. Alright? This is not done like the sales ledger control account where you add up and check. You just place it, you just place a figure there and done. That's it. Good? Alright? So when the credit balance is on January 31, what this means is that, listen now, originally the credit side is greater than the what? Debit side. So in this case now, you would place a 5,151 on the what? Debit side of the purchase ledger control account. Then you add up everything. For the debit side, you get what? 8,866. For the credit side, I get what? 8,826. Now, providing all the totals transferred into the purchases a control account from the books of original entry were correct. There's a $40 difference between the debit and credit entries in the purchase ledger, right? We will have to check the purchase ledger in detail to find the error. A double line has not yet been drawn on the totals. We will do this when the error has been what, found and the totals corrected. Now, you need to be sure that the totals transferred from the books of original entry were correct before assuming that the out of balance that an out of balance control account means what, that the ledger is incorrect. Now, normally in this case, when we get an unbalanced purchase ledger, you normally write a what, note right here. Good. So that is a what, difference between what, debit and credit entries in the purchases ledger. All right. Simple as that. So there's nothing else to be done right here. Good. We're not going to send you on a goose chase to go and check. If you see an unbalanced purchases ledger, all the simple do, as in purchases ledger control account, all the simple do is what? Write a what? Note. And explain the note. Alright? Providing all the totals transferred into purchase ledger control account and the books of original entry were correct. There's a what? $40 difference between what? The debit and the credit entries in the purchases ledger. That's all. Nothing else. Alright? Cool. So you need to be sure that the totals transferred from the books of original entry were correct before assuming that an out of balance control account means what, that the ledger is what, incorrect. So just that. Alright, so that's it for this example. Alright. Other disadvantages of control accounts in a manual accounting system. Nowadays, control accounts are usually only maintained in a manual accounting system. They are not normally maintained in a computerized accounting system. Now, I would ask you to pause the video and write this off, please. Thank you very much. So you pause the video at intervals. Write this off as well. You can pause the video here as well. Write this off, please. Alright. So I was saying that nowadays control accounts are usually only maintained in a manual accounting system. They are not normally maintained in a computerized accounting system. Control accounts have merits other than that of locating errors. When used, the control accounts are normally under the charge of a responsible official, and fraud is made more difficult because transfers made to this disguised frauds will have to pass the scrutiny of this person. The balances on the control account can always be taken to equal debtors and creditors without waiting for an extraction of individual balances. Management control is thereby aided for the speed at which information is obtained is one of the prerequisites of efficient control. So pause the video. Alright, don't for me please. Thank you very much. We'll look at some other things now for this what you're looking at this moment. Look at other transfers. Transfers to a bad debt account will have to be recorded in the sales ledger control account as they involve entries in the sales ledgers. Similarly, a contract account whereby the same entity is both a supplier and a customer and inter-indebtedness is set off will also need entering in the control accounts as well. Alright. Now here's an example of this is the following. The business has sold AU 600 goods. Hughes as well supplied the business with what? 880 goods. And so you go. The 600 owing by Hughes is set off against what? The 880 owing to him. This is how much? 280 owing to what? You. So what's happening here is that you sold him 600 pounds worth of goods. He gave you 880 pounds worth of goods. Now the 600 that he owes you would have been cancelled out by the what? 880. Now you owe him what? 280. I hope you get that clearly. Alright? This is how it looks now in the sales ledger. Good. You would have at first this entry would have been what? Debited and under AUs, right? As sales, sold goods and credit. You supplied you'd have you'd have credited his account. Good. And the purchase ledger. But it's the same person. Good. Which 880. Now the set off now takes place following the preparation of a journal entry in the what? Journal. Alright. Now in the sales ledger, there's a set off of what? 600. Because that means that means that he doesn't owe you anymore. Alright. In the purchase ledger now, there's a set off of what? 600 goes where? Under which side? Under the debit side of the purchase ledger. Good. And then now what happens here is that you still owe him what? 280. Good. Now notice this please. The set off will be posted from the what? Journal to the credit side of the sales ledger control account and to the what? Debit side of the what? Purchase ledger control account. That's the reason why it is there. Alright. Again, the set off will be what? Posted from the journal to the credit side of the what? Sales ledger control account and to the debit side of the what? Purchase ledger control account. Alright. Remember that principle, please. If I would permit you, pause the video, write this down for me, please. Draw this up in your books. Pause the video, write this down for me, please. Please remember this. Alright. Thank you very much. Look at a more complicated example now. Now, Exhibit 31/6 shows a worked example of a more complicated control account. You will see that there are sometimes credit balances in the sales ledger as well as what? Debit balances. Suppose for instance we sold 500 pounds worth of goods to Double Wang. He then paid in full for them. And then afterwards he returned 40 goods to us. This would leave a credit balance of what? 40 on the account. Whereas usually the balances in the sales ledger are what? Debit balances. Alright. So you will see as we go along. Let's look at this now. I would recommend that you pause the video at this time and write this information down in your books, please. For those of you who have a textbook, you see where it is, and it is on page what? Page 371. Alright. So pause the video. Give you some time. Write this down for me, please. So you have sales ledger debit balance is 3,816. Sales ledger credit balance is what? $22. Transactions for the month 104. Cash received 140. Received 6,239. Sales balance written off 7,009. Sorry, but says that 7,090. Balance written off is 306. Discounts allowed is what? 298. Return invoice is what? 664. Cash refunded to a customer who had overpaid his account is what? 37. Dishonored checks 29. Interest charged by us and it is 50. At the end of the month, debit balance is what? 3,429. Ledger credit balance is what? $40. Alright. Alright, let me just clarify something here. Remember that this $40 credit balance, what credit balance mean? Meaning that the credit side is greater than the debit side. So therefore, this 40 will go on the debit side. Alright, the reason for that. Let's go on, let's begin. Now, first one, this will go on the debit side as usual. It says debit balance is 3,816. Then they have sales ledger credit balance is what? 22, which go on the what? Credit side. Alright. Then next one is what? Cash received. Watch this now. Remember our steps that we followed before we went here, right? Now the step says that at the end of the period you must post the totals of all payments from debtors received during the period from the cash book to the what? Credit side of the sales ledger control account. Remember that step, alright? Now this 104 now will go here on the credit side as you see here. Check to see you go here on the what? Credit side as well, 6,239. Same step. Then you have what? Sales. Step says that this the we must what? Post to the debit side of the sales ledger control account the totals of all new sales during the period shown in the what? Sales day book. So therefore this sales figures go here on the debit side, which is 7,090. Then you have something called bad debts written off, right? Bad debts written off are placed on the what? Credit side of the sales ledger control account. Good? Alright. Discounts allowed are placed where? On the credit side of the sales ledger control account. Alright. You may be wondering why. Alright, remember that discounts allowed is a situation where you are allowing discount to the person who is paying you. Good? Now, also, if you check it out, the discount allowed account will have what kind of balance, by the way? Asking all of you, what kind of balance does the discount allowed account have? Can anyone answer me? Oh no. Unfortunately, you can't answer me because you are watching the video, right? Good. So in this case, we must remind ourselves that a discount allowed account has what kind of balance again, by the way? Hmm? A discount allowed account has a debit balance. Alright? Good. However, in the sales ledger, the discount will go here on the credit side of the customer's account. Alright? Now that's the reason why you have the discounts allowed right here, because you'd have added all the discounts under the sales ledger to get the discount allowed account right here. Good? That's why. Good? So you have added up all discounts under the sales ledger to get the balance for the remember that we are doing all totals right here. Good? So to get this figure, you add up all the discounts under each customer's account. Alright? Next one now, cash returns inwards. We have a step which says that what? We have a step which tells us that the returns post the total of returns inwards day book to the credit side of the what? Sales the control account. So that's why you have the what? 664 right here. Good. Then now you have cash refunded to a customer what had overpaid his account. Now what is happening here is that you are paying back the customer. Good. If you give the customer money, if you go in your sales ledger, you would see that recorded on the customer's debit side. You will see it recorded on the debit side of customer's account, right? So you'd have to then debit it in also because it's a total debit. For cash refund, you'd have also debited it in your sales ledger control account. Because if you look in your sales ledger, imagine with me please. If you go back to your sales ledger, right, and you have your customer's account, right? When you'd have if you're giving them back money under the sales ledger in their account, you what? Debit it. That's the reason why you have cash refund on the debit side of the sales ledger control account. Remember that the sales ledger is dealing with what? Totals, alright? Then you have what you call now dishonored checks. You'll go under the what? Debit side of the sales ledger control account. Interest charged by us on overdue debt. You'll go on the what? Debit side of the sales ledger control account. Then you enter the credit balance, which is $40 under the what? Debit side of the sales ledger control account. Why this? Because the reason for this is that the 40, what this was really originally saying is that the debit side, sorry, the credit side is more than the debit side by what? $40. So what you do actually do at this moment, you will understand that the $40 is really a credit balance, yes. Meaning that the what? Credit side is bigger than the what? Debit side. Now, before you put in the 3,429, what you should actually do, gentle folks, is that you would add up everything first. Good? And check to see if the 3,429 is correct. To make sure that everything that you have done is correct. So add up this side, I get 11,062. Add up this side and minus this side from what? This side. I get 3,429. And that's it for your sales ledger consider. Note that you do not net off the debit and credit balances in the sales ledger. Okay? Alright. Thank you very much for your viewership as it relates to this. Alright. I wish for you a wonderful evening. Watch for the follow up video as we move through this topic.